Yo, 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 yo! Welcome back to the Doggy Yaps channel. And today we're going to be talking about the battle for capital, BTC versus equities versus bond. The markets are literally having a free for all right now for capital. We're watching it in real time with our own eyes. So I am speaking to you guys at a Bitcoin price of $61,617 with a Bitcoin market cap of $1.2 trillion. Okay, let's get started. So where we're at right now, guys, capital is rotating towards the world's biggest public offerings that humanity has ever seen. And Bitcoin is feeling that pressure first. Bitcoin is under pressure because markets are chasing yields, AI, public offerings. And Bitcoin is trading at what, 61,000 right now? And this is happening in a market where giant IPO demand is pulling attention and capital into other trades before that money has a chance to rotate back into Bitcoin, back into safe haven assets. We're at a risk off appetite right now. So this is not just a Bitcoin story, it's a whole capital allocation story. So, how humanity's largest IPOs are pulling capital away from Bitcoin. So, this is low-key the key idea of the whole episode. And some of the biggest public offerings on earth are pulling in huge amounts of attention and huge amounts of demand and huge amounts of capital. SpaceX alone has reported to be drawing about $250 billion in investor interest, with this demand running roughly 3.5 to 4 times of its public offering size. And that matters because giant deals like this doesn't just attract headlines. They attract real money, they attract real long-term funds, they attract institutions, and they attract investors who need to free up cash somewhere before they can participate. And these markets are not just making room for the biggest IPOs in history, because Bitcoin can be one of the easiest places that capital gets trimmed first, because we understand that Bitcoin is the most liquid asset on this planet, and people always sell what they can and not what they want. So that doesn't mean Bitcoin is broken. It just means Bitcoin is liquid. Bitcoin is tradable 24/7, and it means that Bitcoin is literally one of the fastest places that people can raise cash when something bigger shows up. And right now, these IPOs are the bigger things that are showing up. So right now we have capital rotation, and once you understand the IPO demand, right, the next step is understanding the broader rotation. So capital is not just disappearing, but capital is literally being repriced. It's moving towards places where innovators think that they can get better safety, better upside, or just better timing. And when treasury bond yields are high, that changes the hurdle rate for everything, right? So on the on the charts right now, we have Kobeisi letter saying on the left here, we have the AI build out for big tech barn. So these are just private, like these are public company bonds, and look how much they're raising, bro. 160 billion dollars in bonds for a company. That's crazy, bro. Look at this. SpaceX IPO has now drawn over 70 billion worth of retail orders alone. 70 billion, bruh. Okay, but that's beside the point. And this completely changes the hurdle rate for Bitcoin, because Bitcoin is one of the cleanest liquid assets to trim when markets get more selective. And this is always going to be the first layer of pressure. Money is gonna flow towards yields. Money is gonna start flowing towards these mega growth stories, and money is gonna start going into these big IPOs. And Bitcoin always feels that pressure early. So bond math, as you can see here, we have 10-year treasury bonds reaching 4.6%, and we have 30-year treasury bonds that are hitting 4.9%. The last time we saw US treasury 10-year bonds hit 4.4% was during 2022. Did we talk about this before? And the last time we've seen these US 30 T-bills reach 4.95% was in 2007, before the '08 crash. So I know history doesn't always repeat itself, but it certainly does rhyme, right? So before we can even talk more about Bitcoin, you guys have to understand bond math, right? Bond prices and interest rates move in opposite directions, which means that when markets go up, fixed rate bond prices usually fall. And when newer bonds offer better rates, older bonds have to trade at lower prices to stay competitive. And that is the inverse relationship. So a bond basically pays a fixed coupon that you lend to the government. So if the bond market price drops, the interest rates on that bond needs to rise. And if yields rise enough, those bonds start looking more attractive to investors who want income and safety instead of volatility. And that matters for Bitcoin because Bitcoin does not pay a yield. Gold doesn't pay a yield. Silver doesn't pay a yield. That's why we've seen these markets take such huge drawdowns, right? So when safer assets start paying more, capital has a reason to leave risk and move somewhere else. That's not ideology. That's just math. And this is where the Fed gets stuck, right? So if they hike from here, capital gets even more expensive to borrow. And that puts more pressure on new loans, new business activity, and new money flowing through the system. But if they cut it too early, they risk letting inflation creep back up. So this is literally the trap. They don't want tighter conditions to choke growth, but they also don't want it to make they also don't want to make it easier for capital because that'll restart the inflation problem. And that is the reason why markets are watching every Fed signal closely. And the reason why we look at the 10-year treasury bonds is because the 10-year treasury is basically what is tied to your mortgage, what is tied to your student loans, what is tied to any type of loan basically. And yeah, that speaks for itself. So we're gonna talk about ETF pressure now. And then you move from macro pressure to visible selling pressure. US spot Bitcoin ETFs saw a historic weekly bleed of $3.7 billion in early June. Right? 3 billion with a B. And Bitcoin ETF outflows also hit a 13-day streak with 4.3 billion withdrawing since mid-May. As you can see here, we can see in January we had 0.40 we had 470 million outflow, and then in February, which was when the war in Iran started, we had a drawdown of 4.5 billion, and in March just a calm 500 million, and actually in April we had 1.4 billion inflows, and late May half a billion dollars of inflows as well. But then that has started to drop, right? Because we're starting to see that there is no easing, right? There's no more buyer of the last resort. That's why Bitcoin keeps dropping so aggressively. So these outflow points to institutional risk appetite, they start to crack. Even though these year to date flows were still net positive entering June. So that doesn't prove that every dollar has left to go buy SpaceX or chase these huge IPOs, right? But it does show that allocators have been reducing exposure and raising flexibility. And in my opinion, that matters a lot more when humanity's largest IPOs are coming to market back to back to back. And if these managers want dry powder for these huge deals, Bitcoin ETFs are one of the easiest places to raise cash. They're liquid, they're simple, they can be cut fast. And so when I look at these outflows, I don't just see fear, I see preparation for these big IPOs. And why SpaceX matters, right? So a little tangent, but I'm actually a really big Musk fan. Like I'm not really a political guy, but I really love what he's done for humanity. And I've been writing articles since like third grade about Musk. Like I've learned about SpaceX Boring Company, and when I was in third grade, that was the first article I've ever wrote like in proper format. And so I genuinely respect the guy. Like I'm not a political guy. I'm a technology guy. I love what humanity does great. Like that's why I'm a Bitcoiner, right? That's why I love technology, because you can scale it to the billions of people that live on this planet. So back to the topic. But now let's talk about why a company like SpaceX is literally has the ability to draw that much capital. So IPO demand has literally reached 4 times of its planned public offerings with more than $250 billion in investor interest. So it becomes the largest IPO in history. And we know that SpaceX went public today, and they came out with what? $135 starting price, and they pulled around like $450 billion. That's fucking nuts. And that kind of demand doesn't just happen because these people think that SpaceX is just some rocket company. It happens when these investors see the real space infrastructure that Musk is literally building in front of our own eyes. Starlink is literally expanding across enterprise and government channels. Like direct to cell telecom partnerships show that this is already moving beyond the niche satellite story. And these filling points to broader wireless and mobile ambitions through Starlink Mobile. So when investors look at SpaceX, they're not just looking at these rocket launches. They're not just looking at rockets. They're literally looking at orbital infrastructure. Elon Musk has literally created a space market for himself here. And they're in the best position. They're like SpaceX is the one company that has the best position in this market because they've created the market themselves. And they're looking at like orbital infrastructure, communications infrastructure, like a literal space platform that can sit on top of the whole global economy. And if you're a fund manager trying to own one of these important infrastructure stories on Earth, I understand why Bitcoin or why capital moves there first. So, why is Bitcoin different? But here's the reveal, right? Bitcoin, treasury bonds, and giant IPOs, they're not the same trades. They all compete for capital, but they don't serve the same type of investors. Treasuries are for investors who look for safety, dollar exposure, and yields while rates stay high. Bitcoin is for people who want verifiable, scarce digital assets and a different kind of monetary property. And giant IPOs like SpaceX, Anthropic, OpenAI, these are for investors that are chasing asymmetrical upside and big future growth. Like they're literally chasing the technology humans will keep on their back for almost forever. And this is why I don't think that Bitcoin being weak right now shows that Bitcoin is being invalidated. This actually gives me more conviction. It means capital is prioritizing something else first. And once these allocations are made, these capital can move back again because they have to diversify somehow. And the key point to this is that Bitcoin is not losing because it needs the same thing as these trades. Bitcoin is currently losing because it's literally just a different thing. And right now, a different appetite is dominating the market. We can talk about the supply squeeze to gain some conviction. And this is not just what makes the long term setup still matter the most. Short term capital rotation can absolutely suppress Bitcoin, but it's basically trying to hold a beach ball under the water. Like it doesn't change Bitcoin's scarcity. It doesn't change Bitcoin's supply story. It doesn't change what Bitcoin is. So if capital rotates away now and back later, it's still coming back for the same asset that has structural limited 21 million capped supply. And this is what I'm saying. Suppression is not the same thing as invalidation. Temporary weakness is not the same thing as the thesis breaking. If anything, what matters the most is that Bitcoin is still scarce when attention comes back. So the answer to that is yes. That is why Bitcoin still cares, and that is why I still care. So, what do we watch, and like, how do we move forward from here? So there are three things I'm currently watching. First, I am eyeing these treasury yields because rising yields are one of the clearest macro pressures weighing on Bitcoin. Second, I'm watching these ETF outflows because these tell us whether wealth managers are still raising cash or whether there's still like whether the selling pressure is going to cool. And third, I'm watching the IPO wave itself because once these giant offerings absorb capital, the next question becomes obvious. Where does the money go after that? Like if it goes back to liquid, scarce, global recognized assets, then Bitcoin becomes very, very, very interesting again. So you don't just watch the Bitcoin chart. You have to watch the yields. You have to watch the ETF outflows. Watch the IPO allocations and know that Bitcoin is still Bitcoin. So I hope you guys enjoyed this video, and I will continue to keep making these if y'all still enjoy it. And once we get a big enough community, like I said before, we will start doing these live and have more fun together. So we can have Q&A. and I can be able to talk to you guys and try to understand, and we can both understand this market together. And I read every single comment. So if you have any other questions or anything I've talked about in this video, drop them down below and I will answer them myself personally. So please, please, please like and subscribe and comment what other Bitcoin topics you would still be interested in. I'll see you in the next one, guys. Ciao.